All right, back here with the Sultan of Sonar for our carrier update. We've got a few charts to just whip through, and then we've got a couple at the end here that are fresh and new.
Yeah, fresh and new charts. Let's get through these first ones real quick here. So contract rates represented here in the purple line. Typically we see a very, straight line up type pattern. Definitely don't see this kind of consistent upward trend, but it makes a lot of sense when you're looking at the tender rejection rates here, up around 28% at their peak levels. Consistently above 20%, even though they've fallen down, they're still 22%, not acceptable in terms of shipper capacity needs. So that is going to continue to push these contracts higher. We took another little stair step up here in September. Some of that obviously has to do with Labor Day, as route guide compliance fell, significantly at that period as well. So continued upward pressure as long as we're above this 20% mark, and that does not look like it's changing as we've done a horizontal move through the month of September after kind of bouncing in the month of August. So let's look at our spot rates, see what we've got going on here. So spot rates, as expected, just continuously climbing. Flatbed here in orange has made a sideways move through the summer months. Not a lot of activity there expected to change, as Anthony was talking about. Kind of a stalled out supply chain, trying to catch up. They can't make enough product. They can't source enough product. Commodities are still scarce, et cetera. Going to limit that growth there. But reefer, still extremely tight. The most expensive mode of the big three that we're looking at here. And then van, again, horizontal over the last week. Mixed bag results. Let's look at the chart of the lanes for van. Lanes, top 100 lanes for van across the country according to truckstop.com. Rates going into Los Angeles, cheap. Rates coming out of Los Angeles and into the Northeast, expensive. Very mixed results right here. You've got a lot of reds, a lot of greens, about even in terms of rates going up and down. Let's look at the map to see where we can see some of this undulation. And, that was kind of last week's spot rates that we're reporting today. This is what's happening today, or this week, as we call it, with the weighted rejection index combining weekly change in tender rejection rates with overall market share. So volume gives it a little bit more weight. So you can't just have a 1% change in North Dakota, for instance, and it show up in blue here. Charlotte, a decent sized market showing up in dark blue. We talked about it yesterday. The Northeast still showing some tightening. That's indicated in the blue here, especially Elizabeth, New Jersey. And then of course up here around the upper Midwest, we're gonna have to pay attention to that moving forward as we have all this freight coming out of Los Angeles. We're entering the fourth quarter here soon, and that's peak season for retail freight. So all that demand that shippers have been trying to catch up with, trying to build their inventories back and trying to project into the fourth quarter, it's now about to be game time. This is when Tom Brady shows up, and poor Blythe's Jacksonville Jaguars have already lost the game more than likely. But the big story here is going to be watching this Northeast corridor as capacity runs out to the West Coast. Priced into it very well, very low rates. We talked about it, $1.30 going out to Los Angeles from Dallas right now, just above operating costs. Coming out though, $3 a mile and higher, and that's where they make all their money. And the freight imbalance situation is going to persist into the fourth quarter, if not get exacerbated.
Yeah, it definitely could get worse here.
Yeah.
I was just thinking back to, we won't go back to it, but that chart of all of the rates, if you split it in half, you had 50 on one side, 50 on the other. I counted, there were only 4 on the left side that were below $4 a mile.
Yeah.
So yeah, you've got hot rates going all over the place, and you've got freight coming in from every corner. We talked about that in the last carrier update. Is that, yeah, we've got 70 ships out here, but you've also got almost a dozen up there in New York and 2 dozen down here in Savannah. So freight is going to be pumping.
Yep. Savannah's in blue, Elizabeth is in dark blue, and you've got Allentown and Harrisburg all up here having trouble getting that capacity, even though rates going into this market, these areas are very high.
Yeah.
They're still trying to get out there so they can travel that long haul. This is a lot of short haul freight. Let's look at the Elizabeth market on a chart real quick. So this is all of our length of hauls with the Elizabeth market. Strangely enough, Elizabeth does have some longer haul freight. Tweener rejection rates, typically your highest rejected, 35%. So if you can get into the Elizabeth market, go 450 to 700 or 800 miles, that is going to pay decently well, 35%. You're still potentially heading up north. You still got a little room to go 500 miles north there, so you could get deeper into trouble. Down here, though, the local length of haul, 16%, still available, though, but that is 16%
still
for
high.
100-mile loads. Let's look at the lanes real quick before we wrap things up. All the lanes going up in terms of tender rejection rates week over week. Going into Indianapolis, I can't imagine why, but it is
This has been a hot market for months, you know.
Indianapolis, the carriers do not want to go in there. I know it's oversupplied to an extent, but it still surprises me going that direction. Columbus, even. But again, a lot of those loads come back this direction. What do you know, Andrew? Los Angeles, 18%. And that has to be, Ontario and Los Angeles, they has to be like, we just can't get there. We can't do it. I can't imagine why that is even as high as it is.
Well, yeah, this is thinking back to your chart of the week a couple weeks ago. That was one of my favorites, the gold rush to the West Coast,
Right.
where we had every other region, you know, upwards of 20%, and going to the West Coast long haul, 11 or 12%. About half people want to be there. That is a bit surprising.
Right.
All right, Zach, thanks so much for your time and insights today.